You've refrained from cutting the GDP projection, unlike some of the economists we've spoken to. Why not? Why not a deceleration expected, given that some say the official numbers from the pandemic could be 5 or 10 times more than what's been reflected?
At the moment, we just don't have that much information really to start cutting the forecast at this point. I think we have to wait for a little bit more real data to come in. But it's pretty clear right now that this is going to have a sizable impact on the growth number for this year. We've assumed, in terms of a moderate downside scenario, that cases peak at the end of this month. That would be enough to bring the growth number down to 9.8% for this year. But if cases peak just 1 month later, that would be enough, we think, to bring growth to 8.2. So even just 1 month of delay in the peak of cases could have a substantial impact on the growth outcome.
Shaun, what assumptions are you making about the impact on consumer demand, on spending by households, given that the lockdown has now been extended to even Delhi?
Yeah, so we've seen so far an avoidance of a national lockdown, but still, if you look at the mobility data, we're already seeing a very large impact. And I think this is reflecting the localized lockdowns. So this time last year, mobility was 20% of pre-COVID levels. Back in March, we got back up to 80%, so quite a big recovery. But now we're back down to 60%, even without a national lockdown. So this means that consumption is going to take a very large hit. We think it could be down something close to 5-10% in sequential terms in this quarter, and then subsequently start to rebound again if those cases peak later this month.
The thing, Shaun, is that a lot of people were witnessing a big bounce back earlier this year. They were patting themselves on the back, politically at least, there in India. But this second wave, in some respects, of course, being worse, may well have a more deeper economic impact. We've seen poverty, of course, increase, and the middle class shrink unprecedentedly. Shaun, what do you make of this, and how does that really, what does that do for future demand?
Yeah, and you know, this is really the key. What's going to be the permanent damage? We've estimated that the permanent damage from the first wave of last year, including the lockdowns, would be in double digits. So, for example, GDP will be over 10% smaller than otherwise would have been without the virus, even when COVID is gone and behind us. The big question now is, will this second wave have another big impact on the permanent damage that we see for the economy? A lot's going to depend on the impact on medium and small enterprises, because these are the big employees in the economy. If these start to close down, it has an impact on the banks. And of course, it has an impact on the labor markets, where people go back to their home villages, lose their job, and it takes them a long time to find a new one. I think that's one of the main reasons why the RBI has come out with this new measure to try and target medium and small enterprises with the new Resolution Framework 2.0. They're trying to provide relief to get these businesses through this second wave and hopefully into the next stage of the recovery. But the longer it takes for the peak in cases to come, the more difficult that's going to be. For now, we haven't assumed more permanent damage, but that becomes more likely the longer this goes on.
And no doubt, of course, the rating of the country will be affected by all this. And we look ahead, and immunization of the Indian population is going to be vital, isn't it?
No, it is. This is ultimately the exit strategy that we need across Asia Pacific, and so far the rollout has been slow. I mean, what we know from the evidence so far is even in economies where you can crush the COVID curve and keep cases low, you never fully return back to normal. Consumer demand in particular remains weak. That hits jobs, and that has a permanent, persistent economic cost. So it really is all about vaccines. And in terms of the longer term outlook for China, for India, I think it really is the permanent damage that we're going to see on the level of GDP. At the moment, we are assuming something close to 10 to 12% in terms of a permanent impact. And then how fast can India grow after this is all over? We've assumed it's between 6 and 6.5%. Other people are saying it's close to 5%, and that's going to be a debate that continues.
Shaun, any possible spillover impact on the rest of Asia?
Less so in terms of the economics. I think India is still a relatively closed economy. There will be some limited impact. It's much more the health impact, and we're already starting to see second and third waves picking up across Southeast Asia that are related to the Indian variant, and that's closing borders. It's introducing more social distancing regulations. Just in the last few days, we've seen that start to happen in Malaysia. And again, that sets back the recovery. Earlier this year, we thought that emerging markets in Southeast Asia would see a delayed recovery because of new social distancing regulations. We put back the time at which they get back to above trend growth to Q4. It may well now be a 2022 story if the Indian variant becomes more prevalent across the region.
Shaun, when you look at India and you see what's going on and you looking at perhaps some of the permanent damage of all this, does this mean that a devaluation of the rupee is really at the moment unavoidable?
Well, it really depends on the policy mix to some extent. At the moment, it looks like the RBI are a little bit concerned about inflation. They don't have much room to move on rates, so they're doing other things. And of course, we've had a large fiscal impulse through the last budget. So that, in some senses, provides a little bit of support to the currency, all else equal. But I think what we have seen from the market reaction to what's going on in India so far is people put back the time at which they think the RBI can actually start normalizing monetary policy. And that ultimately should mean a weaker currency. But really much will depend on external financial conditions. With the US data that we got on Friday, I think this is providing a lot more policy space for India to continue to keep rates lower for longer.